the other choice is that he could go back and buy back the stock. But who's he going to buy it back from? Well, he could buy it back from investors if they're willing to sell it, which, will happen to some degree. You can buy it back from the other market makers, but what if the other market makers are also short? And how many of these contracts do I own? How many contracts do other people own? How are they going to respond? There's a lot of variables at play, but if people bought the 5 strike or bought any strike in any option, the effect that it has is that if those market makers do eventually realize, especially if it goes up to 6 and then it's rallying and goes up to 7, the more it goes, their loss becomes exponential. So if the stock goes through 6, aside from the fact that it's just going up, there's a factor here that is going to lead to additional buying pressure. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And this is a quick one. I'm recording on Wednesday, February 16th. And I'm not sure when this one will go up on YouTube because I got a strike for telling the truth about Justin Trudeau and citing evidence contradicting his views on facts and science. It's neither here nor there, though, because this is something, and by all means, not legal financial advice. My background is as an equity options trader, so just something I've been looking at. But many of you remember or may be familiar with Endeavor Silver. They were on the show a couple weeks ago. They're one of the silver companies that's actually been withholding silver from the COMEX because they know the price is rigged. And when the price goes low, they're selling less, which means that if the silver price rises, they will have more of their inventory to sell then at the higher price. I've gotten to know them over the past couple of years. I'm not going to dig into their projects. Obviously, there's information about that. You can call the company if you want to find out more about what they're doing, where they have silver, why they're going after silver, how their projects are looking. But just from an options trading perspective, I'm trading options on these companies that I've been getting to know, and something that's come out that I thought might be worth at least sharing. Here, we'll pull up the 5-year chart. You can see there's quite a spike here. Got up to 744. Now, that wasn't even during Silver Squeeze weekend. That's May 1st, 2021. And we see here in February 1st, so Silver Squeeze Day, it got up to 590, which won't be on the 1-year chart. That'll pull up in a second. And then 744. So 590-ish. Let's see. Oh, can we get back there? But see, it was above. And now I've somehow clicked on the interactive chart. So let's see how this looks. Here we go. In February of, this is 1-year chart. All right, you see the point here. 623, 612 gets up to 762, 744. The 2-year chart, that is what I would like. All right, if we go back to Silver Squeeze weekend, which is there, 493, but jumps up to 613, even after the banks tamp the price down. So you can see that at least here's the $5 level right there, 487. So let's call maybe this one $5 even, that line. So you see in the last year, it's spent a fair amount of time over $5, which is something I take into mind. Now we can pull up our option board here. This is Market Chameleon, a site that I like to use for certain option trading things. Get nice option board. You also can see the chart here. So that's another place you can look up the chart. But since we've already done that, we'll go down to options, option chain. And I've been looking at the February, you have 2.5, 5 strike, and 7.5 strike. We're right now 2 days away from February option expiration. Now, certainly if silver rallied $1 or $2, I don't know, I wouldn't say it's impossible that you get over $5, but what I've been, as we're nearing that expiration. So here, if we look at the March options that expire on March 18th of 2022, here's the 5-strike call. And you see the market is a nickel at a dime. I'm probably part of that nickel bid. I paid a dime for some. I think I got a bunch when the stock was lower for a nickel. So basically, over the next month, with everything that's going on in the world, where Canada just is doing whatever Justin Trudeau is doing with threatening banking freezes, people are revolting. It seems like even the other people in Parliament, who I might add are far more entertaining than Congress, as I've been learning today. They seem to be turning on him. Obviously, the silver supply was already fragile before any of this happened. So again, this is not by any means what you would be well served to do. I'm just sharing what I'm doing and something I find interesting. Because let's say you pay, if I'm on the bid and someone sells and I get filled for nickel, or if I pay a dime, you can do the math on both. But let's say silver rallies $1 or $2 over sometime between now and then. It's at least conceivable to me that, let's go back to this chart, which is a little easier to see. So that's why I was looking at this chart again, because here's May 24th. Never got up to 744. So let's see what the price of silver was back on May 24th. Here is the 1-year chart. Small letters, looks like that's Mayish. So it looks like silver is about 28 bucks. And Endeavor was up to 744, close to $8, I think, on the other chart, whatever the exact high price was. Now, again, that's not to say that will happen or is a favorite to happen. I certainly think the conditions are in place that, whether silver gets up to 28 or 23.5 now, options expiration coming up next week. And the board would suggest certain people would like it to be around $23 on options expiration. So who knows, but maybe people keep buying a lot of silver. Some of these banks run into trouble or whatever happens. Let's say silver goes up $3 or $4 over the next month, which certainly has happened. You don't even have to get through Ross's tamp down level at $30. But let's say that silver goes up $2 or $3, and by that March expiration, first Endeavor here is at, let's say, $6.50. They get a silver rally, and this goes back, which seems plausible. There's at 650. It's happened many times before, or not many times perhaps, but there's during silver squeeze weekend got up to 5. You see, of course, back here in 2011 got up to 10. Let's just say $6 to make the math easy. So the way I look at this is that if I pay a nickel, now probably if I did this every month of the year 12 times, it would happen less than half the time. It happened once or twice last year, or got over 5 for a couple while. But so that's, in option land, how we look at things. If we're doing coin flips, how do I turn this so I'm the casino? If I paid a nickel and Endeavor went to 6, we'll forget about it. There's still premium before expiration. Then it's a $6 stock, the $5 strike. That means your option parity is $1. You paid a nickel for it, so you'd be getting 20-to-1 return. So if I paid a dime for it and parity was $1 when, or expiration, or you sold it at $1, then it's a 10-to-1 return. So I'm basically looking at different probabilities. And, the better you get and the more accurate you get with your shots, then you start coming out ahead over time. And it's been fun. Like anything, you practice, calibrate, and learn. Fortunately, I have an option trading background to draw from. And again, this is by all means very different than buying silver. So not appropriate for most people. Yet really the key takeaway is something that applies for a lot of these silver stocks that I've never heard anyone mention and wanted to point out, because now I could buy these maybe a month from now, the Endeavors at $4.24 or below $5, and these expire worthless. So whatever money invested could go to zero depending on how things play out. But in the situation that it does, let's say there's a rally, silver goes up to 28 bucks, given that inflation prints are coming out 7-8%, setting records on a monthly basis. I mean, I would think silver is worth as much now, at least as a year ago, given what's happened in the world. So let's say, there's a rally, next week, and this thing's up 75 cents at $5. So the value of these calls is going to be a lot higher. It'll be at the money. So these will be a lot higher. You see right now the puts are a lot higher. And as the stock goes up, the value of the calls will go higher. The value of the puts, without any volatility changes, would go lower, just due to the adjustment in the spot price. Which means the guy that sold these calls to me is going to be losing money. Now he could try and close out the position, or he could buy it from one of the other market makers, or maybe I'll sell some back at some point. But aside from that, what otherwise happens, and I say this again because I used to be the market maker back in the day, and the other choice is that he could go back and buy back the stock. But who's he going to buy it back from? Well, he could buy it back from investors if they're willing to sell it, which, you know, will happen to some degree. You can buy it back from the other market makers, but what if the other market makers are also short? And how many of these contracts do I own? How many contracts do other people own? Are they going to, how are they going to respond? There's a lot of variables at play, but let's say I bought a truckload and I'm buying more, which I might do. I'm not, I own a bunch of them now. I'm bidding for more, and certainly at a nickel or dime, I'll probably continue to do that unless Justin Trudeau found a new silver deposit somewhere. I can't give licensed legal financial advice if other people are doing that, but if people bought the 5 strike or bought any strike in any option, the effect that it has is that if those market makers do eventually realize, especially if it goes up to 6 and then it's rallying goes up to 7, the more it goes, their loss becomes exponential. So the key takeaway here, and again, is not that this is what you should do or not what I'm suggesting for anyone to do, but in this particular scenario, if the stock goes through 6, aside from the fact that it's just going up, there's a factor here that is going to lead to additional buying pressure. Hopefully that makes sense, because yes, there's going to be buying and selling in any given day and people are hedging. But in terms, like if you see for Endeavor Silver, whenever it goes through 5 and starts going through that strike, if there's a large position on the 5 strike, that's what you hear about these gamma squeezes. I'm actually starting to research more what actually happened with AMC and GameStop. I haven't really had much time to do that yet, but you hear the term gamma squeeze, and when options are involved, you know, as we've seen in silver, fundamental prices often divorced from fundamentals. And this is another one of those types of situations that if you look and understand how these things play out, again, you know, there's a chance maybe the stock doesn't rally, you don't see anything happen. But one of these days, and I'll probably keep buying that 5 line until it happens, especially when it's this cheap to me. But again, that's something to keep an eye on. So keep an eye on Endeavor Silver, and depending on how it goes, you know, it's not necessarily the type of thing that you can physically see, but we might be able to see it. And again, this is a bit conceptual, so, but it's something that not just Endeavor Silver you can watch out for on any of these stocks, and something to keep in mind if you are trading options. That is one of the ways that these things work, which you know, it's interesting really focusing on silver for the last decade, but now kind of remembering a lot of these things I just used to do every day on autopilot, and have been helpful as I've been navigating the silver stocks and the options for myself. So anyway, hopefully that's helpful. Feel free to rewatch it again if there's any particular questions you have. If people leave questions in the comment field below, and there's any other experienced options traders out there, if you can help them out, please be kind to each other, and be careful if you're not sure, just don't leave information that can be misleading. But if I see some and have a couple minutes, I will try and help in there and respond. We also will be doing an options expiration on the COMEX preview. We'll get Nate Fisher back on the show, hopefully, for that, as expiration coming up next week. At least I'm saying that on February 16th. So some thoughts from the mind of an option trader. Hopefully that's helpful. Hopefully you're having a great day. We'll take a look at the silver price before checking off. Up 23 cents. So been quite a fascinating week. Had been rallying until yesterday's smackdown. I guess by the time this is on YouTube anyway, we'll see what Thursday and Friday hold. This is why you want to be on that email. If you go to arcadiaeconomics.com, you can sign up to our email list. So when YouTube goes down, it doesn't want to show stuff we put on, and you can get this the same day, because I wonder, at least the way the COMEX option board is set up, it would suggest that you will see, likely the banks would like to see the price closer to 23. You see the price of silver over 25 before Monday or before Tuesday, then something has happened, because there's a big position on the 25 line last line I looked. But we'll dig into that a little bit more. So wherever you're watching this, subscribe there and stay posted. Thanks as always for watching. Thanks for Endeavor for getting silver out of the ground in these circumstances. And I will see you again soon.